Every consistently profitable trader I've spoken with has one thing in common: strict rules and the discipline to follow them when emotions are screaming. Today, we're going to cover some of these rules and give you the roadmap to becoming a successful trader. Let's get into it. Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise, like always. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
Beyond the Trade is for educational and entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
I am so excited to be recording my podcast with my good friend Acro. I mean, we're talking about rules. God, I love rules. I love boundaries. I love just all of these words. I love words.
Rules are the number one thing that I could tell anybody. If you don't have rules, you need to get rules. Period. Got to get rules. But hey, before can I screen share? Where's my button? Share.
Okay, guys, guys and gals, want to let y'all know Mike is a little fired up today. He is fired up, so I'm going to let Mike kind of roll. Right? I think we should. I think he deserves that.
Yeah.
All right.
I
there you go.
Put this up. I got to put this up.
Oh, you're not screen sharing. I can't. There it is. Yeah.
You see it?
There it is.
You see it? Victory, bear down, Chicago Bears. There it is, baby. NFC North Division champions. You know what's crazy? The Bears quarterback has more division titles than Love does from Green Bay. Huh. Crazy, isn't it?
Ha!
Crazy.
Wow. You know.
Come on, really. The Bears, division champions? Who would have thought? Who would have thought?
I really think that I rode this entire train with you. I mean, it's been, never have I could not care less about the Bears in general, but just complete in general. But due to you, I was forced to take a slight interest, or at least understanding, so that I would know what to say during the podcast. But I'm so proud of you, Mike, for your work this year. You worked very hard for this.
I have. And you know what? And I never gave up.
You never did. Never. The darkest of times.
We took that coach from Detroit, brought him to Chicago, and come on, we're eating deep dish pizzas and hot dogs right now. Come on, for cripe's sakes.
Hot dogs. And turns out Detroit is not good.
No.
It says a lot, doesn't it?
It does. Tonight's a big game for the Bears. We don't need it since we did win the division. However, we can still become number one seed, and a win against the 49ers would be amazing. I don't have high hopes for tonight's game, but, when a team succeeds to this level that was never expected to get there, something happens. The whole team starts jiving. Everything changes. Kind of like when you get rules in trading.
Wow.
You like that transition?
I love. Well, yes, I do want to say though, Mike, I am on the Niners tonight. I think.
Oh.
I have to say it.
We can just end this now.
I have to rain on your parade.
Good luck with your podcast. Goodbye.
I just am very. I love Brock Purdy. Love his story.
Because you're not a believer. You're not a believer of the Bears.
I have a financial interest in Brock Purdy doing well. I have a financial interest in it. I'm in my fantasy football championship, and Purdy's my last player to go. And Kyle Shanahan played for the University of Texas, which is obviously my alma mater. So, I'll be happy with whoever wins. Okay.
Those last 20 seconds mean absolutely nothing to me.
Welcome to our sports podcast, Beyond the Sport, where the balls don't
Yeah.
lie. That doesn't go well. All right.
No. All right, let's get into rules.
Okay, rules.
Rules.
So, so
A lot of you don't know. I started with the commish in his league and never traded options. I think I traded one or two in my life just to see how they worked. Um, but when I found Adam's group, I joined and learned more than I ever thought possible. But the one thing that took me the longest to really learn was rules. And everybody I know has gone through it. You get in a play, you're winning. When do you get out? And then you're all of a sudden you're up three, four, five, 600, $1,000, and 10 minutes later you're in the red. The reason is because you don't have rules. Period. If you had rules, you would have started limping out a little bit here, a little bit there, locking in profits. Some of my big rules now is when I'm down is 20%. I don't care what the value of the trade is, really. It's when I'm seeing 20% creeping up as a negative, I'm getting out because I can get back in. And that's the hardest thing. I don't know how you teach that, really. It's like you just have to do it in order to understand how real rules are and how they help you. What's your thought?
well, Trading in the Zone by Mark Douglas is one of my all-time favorites. In fact, I have a note inscribed on the inside that means a lot to me. It was a gift, and from a family member, it says, "I always believe in you." Right. So very cool. The book means something to me for that, but that is one of that is the hallmark trading book if you want to learn about rules. So and the importance of them. And to me, I guess we'll go background about rules. We'll go some so I want to talk about some successes that we had in 25, big scale. I'm not
Okay.
talking like one trade. I'm talking big scale, like systematic successes, and then what are our rules specifically, and then going into 26, and then how do you maybe see them evolving from your current rules going forward. That's kind of how I want to structure things a little bit.
Okay.
So
What's your
basic,
number one rule that you will not break or try not to break? Because we all break
well,
them on occasion, but
yes. Well, the first thing I want to say, and it all kind of goes together, is rules are oftentimes only learned by paying that quote unquote market tuition, right? Your rules tend to be a byproduct of things that you do incorrectly, whether they be mistakes. Well, honestly, it could be successes, right? You can form rules from your successes, which is why it's ever so important to review those too. But for me, and probably with anyone, is just respecting your stops. I would say that. I mean, and I think back in the day we did a stop loss September. It was awareness for stop losses in September. I tweeted about them every day. But that's back when it was Twitter. The defined 12% loss. I actually had a question from a friend of mine and the other day and asked, so what is your stop loss? Do you use a hard stop? Do you use a level stop, as in the support or resistance? Which sometimes those are hard to gauge, but there's an explanation for that. I typically go hard percent, okay, because no matter what, you should be trying to get the best entry possible, and so you should know right away, like if I'm okay, I've got Microsoft pulled up on the screen, okay? And say I think that this is a chart that I particularly like, which I'll talk about this more. But it's forming kind of a little wedge here. So if I was entering Microsoft. I'm looking kind of this range from 465, which I called it going there, to 493 ish. But now it's kind of building it a little bull flag. I'm actually looking at the 2-day chart right now. I'll move it to the one. It's building a little bull flag here, around between 485 and 490. I would suspect that that Microsoft would probably go down to about 480 and then continue to potentially consolidate in between 480 and 490 before breaking out to the upside. This looks a lot like Apple did in the summer, by the way. I'll show you that later. But all these things to say, you should have this 480 listed as your entry, right? If it's sitting at 487 right now, I think it's going to continue to form this out. I want to get a better entry because the thing is, say I enter here, okay? Say I enter at the top of this wedge that I've created that I think is going to the upside. Okay, well, if I enter, say, a option that's 3 weeks out, okay, and it goes down to 480, I'm probably down my 15% maximum stop loss, but it's still within my formation, right? Those are some of the situations that you can't get yourself into. And I know that's a pretty technical view on it, but for me, the biggest rule is stop losses. If I'm playing options, the stop loss needs to be somewhere in the ballpark of 15 to 17%. We've talked about this mathematically, coming back from a 15 to 17% loss is not that bad, 20 max. Because if you have $100, you lose 20%, it's 80. You only need a 25% return on that 80 to get back to 100. But if you lose 50%, you need a 100% gain on that remaining $50, right? So
more than that, actually, yeah.
But you're not using 100% of your account into one trade, so that's not fully applicable. But for options, maximum of 20. I try to keep it at 15. And then commons, around 10% is where I start to look at things. But an example for me right now that I love is CoreWeave. I've been talking about it. It's kind of trending back down a little bit, low volume. I think it's going to form somewhat of an inverse head and shoulders. On 65 being a shoulder, 63 being the head, and then maybe 65 again. There's a chance. My average is 70. So I just plan to run covered calls on it until it gets down to about this area at around 70-ish, probably potentially around my basis, add more shares, then run more covered calls and just continue. This is going to be a longer hold for me. But if my average is 70, okay, where's my line in the sand? Okay. My line in the sand is probably below. Like if my thesis is this is going to be an inverse head and shoulders, right? Then that means that this drawdown should not go below $64.70. Okay. And if it does, I'm out. Right. And so if my basis is 70, which is why I'm happy about it because I got it pretty low to the bottom, below that exact number is minus 7%. Okay? So
I like it.
Entry, it's all about your entry. Don't just go slam it at the top up here because then it could still be in the formation and it could fulfill the formation, but your commons are down 21%. So
yeah, and I would add to that too is if it just starts going up, and then you're going to sit there and go, oh, I missed it. I should have got in. My God, I should have got in there at 76, 77. There's other trades out there. You may miss it, but wait, it will probably come back. It'll probably come back down. It's funny because I have 6460 marked on my chart as an alert, and it hit that the other day, about a week and a half ago, I guess. And did I get in? No. But I know somebody else that did, but it's like, okay, so I missed it. Now, why would I chase it all the way up on that big green candle And if I miss it, I'm okay with that. I should have another 5, 10 stocks right behind this that I'm looking at that are also at these critical levels. You might miss a play, and that's fine, but have some others in backup. I mean, you trust me, if you're making money on another stock, you're not going to miss it. You're not going to feel like you missed out if you're making money on something else. So chasing after something like that has always been a hard lesson to learn. I don't know. It's that 60 level is a big level on CoreWeave.
Yeah. So, I mean, I said I didn't want to get too much into very specific technical details, and that is the first freaking thing that I did. So, because I will say this podcast has grown a lot and has a lot of listeners that are not people that even have a TradingView account, which is awesome, right? We're honestly trying to reach people like that, because I had a conversation over Christmas about money managers, and say what you want to about them, but all they do is they put you in the S&P 500, and then they take 1 to 1.5 or whatever percent fee, and you're literally getting the same return as SPY.
Yep.
I mean, I think it's ridiculous. I think everybody should be informed about, and that's what I told all the people that I was with. I said, listen, this is all, like, go listen to my podcast if you want. No pressure. You won't hurt my feelings. But I think you should at least continue to try to be educated, so that eventually, if you decide to take the leap and kind of manage your own IRA, right? Or have a consultant wealth manager, have some money with a wealth manager, still get their input, and then manage some on your own and save money on the fees. That's not for everybody, but the point of this is really, we're trying to reach as many people as possible. And so we're just trying to be the good guys in a dark space.
I want to see everybody make money.
Precisely.
That's the reason I'm here doing this. Is I want to help get rid of bad habits, create good habits, and get people. I can't teach you how to make money in the stock market, but I can teach you how not to do things wrong, and things that we talk about, like having rules and finding. I don't care what it is, whatever indicator it is that works for you. They won't work forever. They only work for a certain amount of time, and then the market slightly changes. Those need to change. You need to stay up on it. It's like what I use today would not have worked a year and a half ago. And 2 years from now, what I'm doing today is not going to work 2 years from now. That's going to have to evolve into something else.
And that's why I want to talk about the evolution, going into this year, because it is an important thing. You got to move with the markets, no matter what the markets are doing. Our job is just to try to make money, and right. And so, when it comes to rules and about forming them, say you don't really have a great idea of your rules. One thing that I've always said is document, journal. If you have a trade that you wish would have gone a different way, that could be a loss, that you made a mistake, and you thought you saw something you didn't. Write it down. It could be a winner, right? It could be a winner that you didn't leave any runners, meaning a small amount remaining just to see where it goes after you already take most of your profit. If not all, 95%. Like we've said, if you're trading options, sometimes you'll leave 5% of your position in, and that will cover the gains that goes on to make. It can be 50% of the other gains.
Yeah, absolutely.
It's ridiculous.
So, I mean, you have to have entry rules. You have to have exit rules. Those are the first two rules that everybody should have. And if you don't have them, start developing them. I can't tell you what they should be for you. But, what we were just talking about, a great entry rule on CoreWeave is that 6460 or 6480 level. Anywhere in there, that's a great place to enter. If it doesn't get there, don't enter. That's your rule. If that's the rule you've set. Now, when do you get out? Well, that depends. How much pain do you want to take, or how, if you just buy it today and think, well, I'm just going to ride this for the next year, guess what? It could be back to 20 in no time. I mean,
Totally.
You need to take money, lock in profits, and that should be another rule: is at what percentage are you starting to get out? I normally trade options, and it depends on the size that I'm taking. But for numbers, to keep it simple, if I trade 10 contracts, I look for 20% before I get rid of 2. After that, I've got 8 left. I'm looking at 30%. I get rid of another 2. And again, I'm day trading these for the most part. I'm not buying 3, 4, 6, 8 months out. I'm buying weeklies or at some point, monthlies. But still, the percentages are the percentages. If you've got $2,000 in a trade and you're getting 30%, well, man, I'm happy with that.
It's pretty darn good, huh?
Yeah, and I'm half out when it gets there almost. Now I'm looking at, okay, where is this? What is it looking like? Does it have a lot of wheels and wings behind it? Does it look like it's sputtering? I may then, if I go back down to 25%, I may get rid of a few more. If it goes to 35, 40, I'm probably down to nothing but runners. And for me, runners is 2 to 3 contracts. But there's times where those 2 to 3 contracts will make me more money than the 7 before that made me. But I've locked that in. I'm not giving anything back. If they go to 0, I still made money.
Yeah, exactly. And that
those are basic rules, guys. Entry, exit. How much pain you want to tolerate. It should never be that way. It should be, these are my levels, these are my goals. Where is it at? And you're looking at your indicators, other levels that you have set above that. If the stock bounces off that other upper level you had, to me, that's a sign that I'm probably going to get rid of a few more contracts because it's stuttering here at this important level. It means something. There's a reason that I had it on my chart. So I'm fine if it rockets and I got rid of 7 contracts before that, and I'm fine with that. I already made $500, $600, $700. That I'm off my soapbox now. Go ahead.
No, I was just if for those watching, tell me how awesome this is right here. I drew this line on Alibaba in October. In October, I drew.
It's really funny you bring up Baba because that has been on my list here.
The chart is perfect. The chart is perfect, and wow, I mean, perfect. Look, I mean, it is followed to the T exactly, and with the timing too. That's ridiculous. That's pretty close. So basically, the whole point here is entry. Right? There's entry. There's exit. And there's risk management, which is part of exit, right? Exit can be good, exit can be bad. You need to have a plan. Like entry is just you're entering. You could scale into a position. You can dollar cost average into something, or if you say you like CoreWeave, okay, well it's at $72 today. You don't think it's going to get to 65. Maybe buy a third of your position today. Wait and see what happens over the next 3 days. Buy another chunk. And then buy another chunk. Sometimes buying in slugs is really dangerous. I mean, always buying in slugs is really dangerous. Remember that you can always scale, right? You can always scale in. You can always scale out. If you start to get scared that your position is just like Mike said, with his options, he's scaling out at certain price targets, and for him, they're set percentages, right? Some people go with price points. Some people go with percentages, right? It's all. I tend to go with percentages when playing options, and then, percentages plus a key level, support or resistance, and then when it comes to commons, it's purely support and resistance, but. You calculate your risk to reward, right? So if I go back to CoreWeave, my risk is 65. Okay, that's where 64.60, right? It just where I have a thesis. I think it's going to do a certain formation. And if it doesn't, then and again, this level is important because this was the high 4 days after the IPO. My thesis is this, as you see. I think it's not going to break below 64. Call it, but if it does, I lose. My risk is whatever the decrease is from 70 to 64, which is 9% on commons, which is totally fine with me. That's my 10% is where I start to kind of go, my entry must have been bad, but you can always scale in, and I've scaled into this, and I plan to scale in more as it goes lower. That's my plan. And the thing is, the lower it goes, I'm actually lowering my basis if it goes into the 60s. And then also for the shares that I buy at 68 and I sell them at 64, I'm only losing 6%. But regardless, my risk is 10%. Okay? Let's just call that with 70. Mike, do you have something to say?
Yeah, well, something that we had talked about from our messaging back and forth during the week, figuring out what we were going to do tonight. The next subject that kind of came up was doing a episode on risk reward, which I think is so important.
Oh God! Well, that's what I'm about to say.
Yeah, so many people miss that. And they go, "Well, I know when to get in, I know when to get out." Well, if you really start charting it out on risk and reward and using that tool, if you've got TradingView, it's very easy to do. You can see what the percentage is. It's if you want a 3-to-1, a 2-to-1 risk reward, meaning you're willing to lose $100 to make $200. I think that doesn't get talked about or taught enough in what we do. So I'm looking forward to that upcoming episode on that. I think that's going to be a big one.
So if you're watching, I've got the tool out, right? So this is a 3-to-1. So I would say my first target is 90, which is the high from December 9th, only a few weeks ago. My risk is 10%. And so up to 90 from 70 is 30% gain. And then down is a minus 10%. So it's an exactly 3-to-1. But folks, that is target 1. I mean, I am here for target 2, which is 114, 63%, and then all the way up to about 135, which is about 90%. So, and that risk to reward is just a slight 9.87. So,
off topic for today's rules thing, but this is something that kind of falls in with rules too, because you can set that as your rule.
It absolutely does.
Yeah.
You need to have that's kind of what I was getting at is your risk to reward needs to be a lot. I mean, it needs to not be 1. I wouldn't take anything that's 1. 3 is where I go, oh, okay, yeah, 3's good. I would consider 3 good. I would consider 2 viable when doing a commons position, but sometimes they take a long time to evolve. So if I'm just trading equities, I want to find something that has the lowest risk with the most explosive reward, obviously. Want it to happen fast. So, okay, entries we covered. Exits we covered on both sides. For me, at each price target that I've established, being 90-ish, and then 114-ish, and then 135-ish, just for example on CoreWeave, I'm taking a little bit off on each of those, or I'm selling covered calls at those price levels because I think it's gonna fall back down a little bit, and so I keep my shares. But then I'm kind of capping my upside in case it does continue to run. But entries, exits, risk to reward, that's kind of the baseline.
Yep. And it's if you don't have rules, that's one of the best places to start is what are you willing to lose, and set that as your bottom. At least have a bottom. If you don't know when to get out, that'll come. But I think you really need to go back and look at your previous trades, and you'll start seeing where you struggle. And wherever you're struggling, focus on that. It's like, well, my entries are great, but I just don't get out, and all of a sudden my green trade turns red. Focus on that. Find a rule that works for you to change that aspect. If you're getting in early and like, well, I'm down 20%, I'm closing it, and then all of a sudden it turns around on me, boom, there's a good indicator for you to figure out what are you doing wrong on your entries and set some rules. Find some indicators to help you. But, you got to have entry rules. You got to have exit rules. 1 and 2.
And this is very, very common. What something you said made me think that I need to say this. Many people look at a chart and they say, oh my gosh, look at all this upside potential. and they never think of the downside potential, right? It's like, wow, do you really think like Palantir could get to 400? Wow, that really? But what you don't think about is it could go to 90. No, so equally weighting both of those.
I remember, I don't
very
even
important.
know when it was now. Let's see, we can go to the daily on Baba. It went under $100. I'm like, Baba's under $100? When did that happen? Because I wasn't really watching it.
Yeah,
That
so
was
that
probably, was it around April of this year?
yeah, one of my buddies is in Baba, and he was big into it. They've been participating in AI. look at my line. Look at my line here. That is what they call exponential. Oh, I don't have
Well,
my
they had their issues. April, that kind of lines with the whole tariff thing,
I don't have my log.
and they were struggling. But now they're so big into AI, they're hooking up big with AMD, NVIDIA on chips. It's like they've got their whole little own world going right now. So that's actually one of my bangers. I don't want to get ahead of it, but
This is another one that good friend Lane, formerly D-Book Trading, has sent this one over the weekend. And when he sends something, you literally risk your life on it. Except for when I do, it goes down. But anyways, I just want to let y'all know. But it's funny.
that's my thing. Is if anything you learn from this podcast, anything in 2026, set rules, and at the end of the year, tell us how you did. If you set rules and followed them, because I guarantee you that will be a big difference in your trading. That's what made me go from adding money into my account every single month to taking money out of my account almost every single month. Not every month, but yeah, everybody has those months that don't work out. But I went from putting it in to taking it out, and it's all because of rules.
Exactly. And even with the strictest rules and the strictest following of rules, you have to understand that you're still going to be wrong, right? Just because you have rules doesn't mean you're going to win every trade, and you have to be okay with that. Don't make it a pride thing.
But you'll have small losses versus
Right.
all of a sudden that one you're going, my God, how did I end up 80% down on this? Because you didn't have a rule.
I think if you don't have any rules yet, and you're just what these guys keep saying rules. I mean, what the hey do they even mean? The first thing I do is establish a hard stop loss percentage, right? And I wouldn't make it more than 30.
Oh no.
If you do, I mean, I wouldn't probably make it more than 25. I'd start with 20. 15 to 20 is kind of this and a lot it depends. I mean, but if you're
20's
trading,
kind of mine. That's where I kind of draw the line. At 20, I'm opening up my screen to get out of a position. And it depends what I see on the screen at that time too. It's
Yeah.
like, okay, now it's down. Yeah, I'm down 20, but it's literally bouncing right at this support level that I had. Okay, I may hang into 25, but that is my absolute maximum.
yeah, I would say the two things actually that you need to do just as a beginner or a veteran, right? Every veterans would agree with me is set stop. I would just say percentage, go 20%. And then as you trade, you can adjust that as you see fit. Say you're clipping, you're getting rid of too many winners way too early. Okay, well then you have an entries problem. You need to go work on your entries. You shouldn't be entering stuff and every single time it goes down 20% before it goes your direction, right?
And guys, trust me, having a stop set, there is nobody out there looking at your stop going, "Oh, well there's Acro with his 5 contracts. We're going to just take those and the market just came down there and took them because I set a stop." No.
But I promise that does happen. I know it does.
It feels that way sometimes. Trust me.
Oh my gosh.
My God, they knew where it was. But yeah, there is stop loss harvesting that goes on. But again, they would have dropped it below your rule of whatever it was, 20%. Fine, let it go. You can always get back in.
Yes, and I always say when you're in something, you're continuing to buy it every single day, and that goes specifically with options because there's
rules got me so fired up because that's what changed from being an unsuccessful trader to becoming a successful trader, and I can't I can't tell you guys that enough. Set rules. It makes a huge difference.
Welcome to Beyond the Trade, where Mike talks about how he's a transformed man because of me.
I am.
Oh my gosh. But the other one, Mike, is hard stop. Just set it at 20%. If you're doing options, if you're doing commons, I'd say 10 to 12. And then sizing. Okay, we're not talking you're throwing your entire account at one thing, right?
God,
Sizing. Don't even throw 50%. A lot of people say on a single options trade, only throw, if it's a small account, 10%. But it all varies. You should always take a trade as a percent of your account value. And what I like to think of is, okay, what gain or specifically loss on my account would make me kind of skittish, right? What dollar amount, I'm just going to say dollar amount, would make me get emotional. Okay, now go below that threshold. You got to simulate in your head where that emotional threshold is. It's like, I don't really care. Like, sure, it was a bad day, but I have good days that are 2x that every time they're a good day. So I'm upset, but I'm not even upset, right? You need to find where that dollar value is and then math into what your position size needs to be in order to have that 20% stop on options or 12% stop on equities. And then if you take one trade and it hits your stop loss, or two trades hits your stop loss, depending on how many times at bat you want to give yourself. Say you only want to lose $500 in a day, like that's fine with you. You won't get emotional. If you're taking $1,000 positions, say you take a 20% loss on two separate positions, you're down $400. Okay, you're approaching your threshold, so maybe you just stop there. So it's always sizing, and say you had a $10,000 account, $1,000 trade would be 10%. So that's kind of some simple math, but it's really emotion. Figure out where your emotional threshold is, and then math into how you need to do it. Because especially me, like going into certain things, like if I'm about to go, to Colorado with my family, right? Or I'm about to have Christmas, I'm serious. I don't want to be angry about a trade, or be like, wow, and just want the market to open, because after you lose one, you're kind of like, I just want to get it. I just want to get back at it.
Revenge trading. No, never do it.
Well, yeah, not necessarily revenge trading. That's very bad. But just I want to be the man. I want to get it right. And so approaching things where I know I'm going to kind of be disconnected, I always just make sure I've cut my size on anything to where I'm just cool, calm, and collected for however many days I'm out of it. And I want to make it to where I don't even want to check my phone. I have zero desire to check the price of that stock if I were to not look at it for X number of days. Like, that's how I feel about CoreWeave. I have an equities position there, and so emotions controlling them. Should we talk about some successes from 25? Like just a couple rule following successes or evolutions that helped, or just successes in general.
Sure.
And do you have one on the top of your head?
Well, for me, it was kind of what I did the video on a few weeks ago, was finding the indicators that worked for me, and sticking to those, and not getting in when only one is kind of alerting, always waiting for at least two. That was a huge difference for me this year. And I mean, I missed out on some trades that would have changed my world for the year, but so what? I mean, they're gone. Nothing I can do about it. So, but you learn from those. And again, for me, it's discipline was the most success I had this year. Back when we were, go back, 3-4 years ago, the guys used to always laugh that I was the Tesla guy in the league. but I knew how to trade
You
Tesla at
were.
that point because I watched it all the time, and I kind of got that back this year. I stayed away from it after it did that split. I could not trade it for anything. I lost more money on Tesla after the split, but now it's back into a pattern, and I think that's kind of a thing to watch for too is the pattern. What does it do the first hour, the first 2 hours, 3 hours? There's so much to look at on any stock really that they have patterns, they have personalities to them. Finding a personality of a stock is a great thing. I used to have that with Apple, and then I lost it, couldn't figure it out anymore. But I've got back into figuring out Tesla and sticking to rules. But it I rarely will trade Tesla after the second hour of market open. It's like it all happens, and that's a weird one because it used to be I don't trade anything for the first half hour. Now there's times I take Tesla on the first candle. If I see
Yeah.
things that I like and I've got indicators that are saying today's going to be the day, get in. But I have my stop set. I'm ready to get out if it doesn't work out that way. But I haven't had. I mean, I had one that we talked about way back when, where I could have had an $80,000 payday on AMD,
Hoy.
and I got out of it early, and it just blew up overnight. I think it was on a weekend.
Oh, yes. It was the day that they had that deal announced with OpenAI. Yeah. This one, the one that went from 165 to 225. Is that all time high?
And I think the day
Most certainly is.
I think that was that on a Monday that happened over the weekend.
You are correct.
Yeah. So on Friday I closed out 20 contracts.
Welp. Can I give me a big gulp?
But I mean, I don't have any one particular thing. For me, 2025 has been a great year of learning from bad habits that I had and setting rules that I follow 90% of the time. I mean, don't get me wrong. I'd be lying if I said, "Oh, I'm never in a trade if I'm down 25%." That's a lie. Yeah, there's times that it happens, and it's only because of what I see behind it. It's like, okay, well, I'm gonna let it go a little bit longer, and most times you end up regretting it. But I'm okay with the risk. If you're not okay with the risk, don't do it. I mean,
That goes for everything.
yeah. I mean, yeah. At some point, if you're not following rules, you're gambling. Period.
Totally. It's pure gambling. And, I think that, day traders, particularly an options day trader, cough, cough, Mike, I do it too. You get a bad rap for just, okay, so you're just gambling? Well, do you not understand? They don't. Most people don't until you take the time to explain it to them if they even care. Is that there's a system. There's a system behind all of this, and sometimes the system works, sometimes it doesn't. It's basically the old saying, instead of using the stock market as a casino, you be the casino, right? And even casinos give out big paydays, and people will crush a casino on blackjack just due to chance. But in a large sample size, a massive sample size of games over a long period of time, the house always wins. And so if you just use the math to make yourself the house, and then, like Acro said, you learn about these specific stocks. When you get comfortable with stuff, you become the house. So for me, CoreWeave is one of those stocks that I just track really well. AMD is also another one that I like, but you learn if you really are into tracking the daily moves and like really learning a stock, just go pull up the screen and look at it 5 times during the trading day. I don't know, or just watch it during open. I think that learning the movement at open, and then how does it perform during the day? Like, does it chop a lot during the day? Does it only move before and at the beginning and end of the day? AMD is one that really chops a lot during the day at times. I just pulled, for those listening, I just pulled up a chart for the last 3 days on the 15 minute, and it is quite literally a barcode. It is it's just up, down in a $3 range. So there you go. See, when you trade them enough, look at them enough, that's it. There's a lot to learn. Palantir is one that I've gotten pretty good with. Pretty good. And this one, Palantir's come down to kind of a key level at 187. I suspect it goes right back up and fills this gap up to 202. But yeah, this one's been resilient. Anyways, for me, successes, I would say the biggest success and growth part of my trading has been research. I think instead of just relying fully on technicals, which is still my bread and butter, AI has become so capable of helping that I use it. I use it all the time when I need to know about a company or I see something. I like the chart. I want to know, what their strategic roadmap is. What's their guidance? What's their what products are they working on? What are their future catalysts? What are their financials, their debt, any recent issuances? You literally can get all of that through ChatGPT. All of it. Like, I didn't know all that much about iron too long ago, but I just did a ton of research on iron. I still like the stock. I cut mine a little, right before it took this dip down to the 30s, which was probably a decent buy zone, given that it's at 42 again, 40 again. But it's you spend a couple of hours just chatting about it. You can even say, as somebody who's trying to research this stock, what questions should I be asking you to the AI, right? And it can, even if you're not a financial person, you can literally have the AI tell you what to ask, and then it'll just answer it. So, it's a good way to learn. I researched 100x more this year than I did in past years when it, regarding new companies and stuff. Instead of just sticking to, trading Apple, Microsoft, and Tesla every day, getting in the weeds and trying to find big winners has been a real success. Obviously, APLD was a gigantic success for me. As you can see, I've got a million marks on the chart. This one was perfectly timed. I was buying in the nines. Average was probably 11 because I averaged up on dips, and rode that all the way up to 40 and sold it about 38, which is still the top. So really proud of that. Really proud. Well, but it's not even. I mean, yes, but this is all publicly available information. It's like NVIDIA owns shares of this company. Okay, I knew that right here on June 2nd. I said, okay, NVIDIA owns portion of this company. It just made a deal for its future data center with CoreWeave. I'm going to wait for it to dip down to a level where it's just consolidating. Then I'm going to buy a bunch. Low and their catalyst was Q4 of this year. So it was a 6-month catalyst, and I said, okay, like that's probably going to be my hold period, July to October. All right, well, how about 3 months? And bang bang, right? Very easy. And that is all thanks to the research I was able to do using AI. Use the tools that you have.
Strong tool.
And I know it's so,
it doesn't know anything that somebody else doesn't know, but it's able to spider so many other websites and data banks to get answers to questions. It cuts hours and hours, sometimes days and weeks out of research.
Hours, because
gives it to you in seconds.
Historically, I'm running through SEC files, which is just it's like watching paint dry, which I know you did yesterday. But I'm gonna continue to harp on research, and I'm not even talking technicals. I know technicals. I'm fine with technicals, and I'm good enough at making a thesis on technicals. I'm often wrong. I could be wrong about CoreWeave, right? I could be wrong about anything going forward, but I've got that part, and then just all the extensive research is so fast now, continuing to use AI. So that was a huge success for me.
I have nothing else to add there. I really don't.
Yeah, man. I mean, those are two big notes.
Rules.
How do you see your rules evolving in this year?
I'm pretty happy with where I'm at with mine, and I think if there's one place that I would like to improve on is probably, I don't know, entries maybe. Even though I think I've gotten better and better at entries, so I want to stick to the rules I have and let them play out. If something stops working, I will start looking.
And that's really the whole point about it is like you have rules, and if they continue to work and your account goes up, obviously, monitor yourself, be self-aware, and see, is there any extra upside I could have got by, adjusting this rule potentially. Yeah. Or my drawdown's too much because my stop is too low. Yeah, maybe. So totally worth thinking about.
I guess for me this year would probably be journaling a little bit more on my trades.
Yeah. And in what way?
I'm not great at that. I don't have, a set spot where I enter all my trades, what I was thinking. And I don't know that I will do that, but I think especially on losers to write them down and be able to go back and look at them and say, okay,
write them off.
Write them off too. But I think to get it more in your mind as to what went wrong with the trade, why were you wrong, trying to find a reason why you were wrong. I mean, if you win, you win. I don't really care why I won. I just want to win.
Yeah.
Right?
Hey, I mean,
but I mean, if you're 3 or 4 times in a row, you're getting into Tesla, for example, and you've lost money on it every time, find out why. And you can do that by journaling, write it down, go back, look at the stock, see what it was doing, what caused you to think it was going to go up, and learn from that. I mean, I guess that would be one thing that I'll add to my New Year's resolution is journal more on especially losers to get into a little bit deeper analysis as to why. Why was I wrong? What happened? Was there news? Was it just misreading a chart? Levels weren't right. All those things will continue to teach you something.
I also think that entries is one for me. I think, of course I get eager, right? I think it's trusting your process. If you really suspect that something could get to a certain price level, but instead you just, it's close enough, and instinctively buy it, right? I think it's more so, trusting yourself, adding when sad. I think when you have a plan on an exact level, I know I keep going back to CoreWeave, but I always said that the 64 level was absolute money. And you know what? I had shares there. I just didn't hold them. I just said, oh, what if it continues to break down because the day closed lower than the previous lows in November? I was scared. And then an inside day happened on low volume. So I was, not sure what's happening here. And then boom, they get news. I add after hours, right? So I could have just trusted myself. And I think that was a pretty good entry. But I think I've had some times where I'm looking at a chart and I buy it because I think that there's, upside. It might be an all-time high ahead, and we're at kind of an intermediate support level, right? Where there are still support levels lower, and there's no real sign that it's done, that it's not like an ultimatum. Like I consider CoreWeave's chart a freaking ultimatum, right? I just really do. And to be fair, Microsoft's too. Like if Microsoft drops below 468, or shoot, if it drops below 475, this whole idea of this it wouldn't be fully broken. But I think entering, because I could enter Microsoft right now. I could enter calls right now. And I have a feeling that this is going to happen. It probably is. It looks just like Apple. And when I'm saying this, I mean, it's at 487 right now. I think it's going to go to 480. And I think that's a good time to buy it. Shoot, it could go to 470. It could go lower. So just keep that in mind with sizing. But I think it's eventually going to break out. But I do think it's going to drop in the near term. My evolution that I want is to never, ever in 2026 take the entry here, right? If my thesis is I think it's going to go lower, don't buy it at resistance. Wait for that perfect entry in your eyes and don't, slam it. I think sizing is another thing that I want to be very, very mindful of. And like I said, that constant conversation between my size and my emotions.
It's all about size, buddy. It's all about the size.
I knew you were gonna laugh about that. I actually over the Christmas break, I thought of a new pants brand that I want to start, a men's kind of like work pants brand, and I said this. So this, here's what I'll say. I got some pants for Christmas, okay, and then I said, wow, okay, they're too big, but it's enough space in the right areas. And I said, that's sometimes that's a problem, right? I said, sometimes it is, like I have some Peter Millar pants and those are tight. I don't know if it's just me, but they are. And so I thought, hear me out.
I can't even go here.
Battle of the Bulge is what the brand is going to be called.
Battle of the Bulge.
And it gives space in the right areas. And here's the thing is if you need it, you buy them. Even if you don't need it, you buy them so that people think you do. Oh my gosh. Wait, hold on.
I used to be, this is actually a true story. I used to be big into motorcycles, and the girl I was dating at the time. There it is.
Wait.
Boom.
Oh gosh, that's so loud.
You found the sound effects button.
Anyways, that's a problem for going forward. I've got a nice mic in case y'all didn't know.
You sound fabulous tonight.
Thank you. He said delicious earlier, and I
that was private.
I almost hung up on him.
That was private. No, you didn't. You liked it.
All right.
Let me finish my quick story. Girl I was dating, I used to be into motorcycles, and she had one pair of jeans that she always liked to wear whenever she went riding. And because when she got off, they weren't stretched out from sitting on the back of a motorcycle for hours. And she just liked the way they fit her. So I did a little research, and they had like 2% spandex in the denim. Well, being the entrepreneur I am, I end up getting a hold of a guy that I know who has contacts in China, and I say, hey, can you give me some jean samples that have 2% spandex in it? He's like, well, let me find out. He does. He gets samples actually made. She puts them on and is like, oh, my God, these are amazing. So we came up with a brand name. The brand name, this is genius, dude. This should have made me a multimillionaire. The name of the jeans was rider wear, like, motorcycle rider wear, but it was spelled ride, H-E-R, wear, ride her wear. Well, at the time I had a company. Yeah, thank you. Thank you very much. I'll be here all week. At the time I had a company that we did packaging and branding, and Harley Davidson was one of my big customers. We approached Harley on it. Them sons of bitches took the idea, stole it, and put out their own brand.
Really?
Yes.
For the jeans?
Yes. And I was told this, like, if you get successful in this jean company, companies like Levi's will eat you alive because they see a 2% decrease in their sales as you massively intruding on their territory, and they will crush you. And it was true.
They won't buy you.
Anyway, screw Harley. I sold my Harley right after that.
Wow.
Anyway, that was my story. I don't know. You know what time it is?
It's time for Sunday Bangers. Pew, 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 pew,
That new microphone is there. It is.
All right, Michael, take us away. Where am I headed?
I got two. It was a short trading week, so there wasn't a lot of action going on. It's kind of hard to really get a feel for where things are going. But I'm going to go back to a couple of oldies. One we already talked about, Baba. I like
Baba.
I think Baba's got a lot of room left in it.
Let's establish price targets.
I have a target at 160. Actually, what is it right here? 159, 160, right in that range.
I look back. There's a gap. Back in November of 21 from 147, which is a current support, to 161. I like that.
There you go.
Yeah. Oh, perfect. Man, I love how. I mean, come on.
See how that all comes together?
Charts. You look at that. It's perfect. Yes, okay. Keep going. Next.
I am still in, and I still have. I think because last week was kind of such a weird trading week. I think Nvidia has a big move in it here coming up.
Well, we weren't
the whole
fully
Grok GROQ thing, the $20 billion deal. I don't think got any traction, being that it was a short week and there was such low volume.
Yes, I would not be deceived by this week, folks. What a dumb line I drew, but how right is it, though? Yeah, so far, all 4 days.
I'm very happy because I've been on these things when I was down at 173. I've been holding them, and now we're up at 190. And I think Nvidia will break 200 here in short time.
So I feel that too. There's pretty much clear skies. It's really close to all-time highs. 195.62. Pretty much a specific cent. It's gonna be one to break. I sense it probably takes a dip. Are you up on those?
I am. I want to say I'm up maybe 15%. I was down. One of the ones I broke rules on, I held on to it, but they're end of January calls that I bought in November. So
you're where do they stand?
Yeah, I'm slightly up on them at this point. Okay. I was way down. I was down more than my 25%.
Yeah, if I'm being honest,
and I care less what Michael Burry has to say about it.
Yeah, I know. Heard. I think you probably see this 195, and then you probably come back down to this this 180, this wick up here at 188 or 185 again before taking back. That's just my 2 cents. So I would. End of January.
I'm going strong. I'm saying it's going right over 200 first week of January.
All right, we're not even thinking about the downside. Let's go. Let's go.
I ain't scared.
Oh man. Okay, Baba, Nvidia anymore?
Nope, that's it for me. It's a short week. I haven't spent a whole lot of time in the market, so I've been busy building cabinets and other stupid stuff.
Dope. Awesome.
What do you got?
For me, the Sunday banger is I think early next week, running back Jaden Baugh from Florida is going to commit to the University of Texas. Very, very good player. We just took their running back coach because we fired ours. And I think he's coming. We're going to be a powerhouse. Natty, for sure. Anyways, that was my first Sunday banger. Second would be CoreWeave. I know. Stop.
Here we go.
And then it goes ad win sad, right, guys? That saying sounds dumb, but it's so true. Ad win sad. And I'm over here. I'm saying, oh no, there's literally nobody buying. No one buying right now in the last 3 days, which it was a holiday weekend, right? You go look back and you look for the past days that it was falling on low volume, and it was, in this case, rounded off the top near support. I mean, it somewhat looks like this. I mean, if you circle all of December and then you circle kind of the tail end of October, early November, it does kind of look like that. So that's why, I mean, that's why I have a risk set. I could be totally wrong here. CoreWeave could go to 30. Could be totally wrong.
Inverse Head and Shoulders.
It could be. It could be, or it could not be. So I think this is a different formation than up there. Some people think it's going to go lower, which I love the fact that people think it's going to go lower, because that means that the boats are evenly split. I need a painting. I need somebody to get me like an interpretive painting with, drawings and, words on it of the boat. And they're saying, you get into the other boat. There's everybody in one boat. I say that too much, but anyways, I need a boat mural. Okay. My second one, this is going to be an options trade. I might just, by the way, make sure you put your money in your Roth. Jan 1, baby. Yeah. Roth loading time. If you haven't already maxed out your Roth for this year, clock's a ticking. Put it in. $7,000, and next year it's $7,500. I'm just geared up and ready. So Microsoft is certainly a Sunday banger for me. I think this one does have space to go down. You literally cannot ignore this volume here on this Friday, December 19th. Of course, that was the quad witching day, which quad witching is just the expiration of a bunch of different contracts and options and different financial instruments at the same time. So it tends to be a high volume and sometimes volatile day. Pretty much all you need to know about it. But I feel good because Microsoft tapped this 465, which we said would happen, the high from July of 24. And now it's kind of building a wedge similar to Apple, honestly similar to what it did itself in about September. I do see this potentially having a dip down maybe to 475. That's why earlier I was saying it's not invalidated if that happens. But I'm going to pull Apple up again. For those watching, it's literally the same thing. It's nuts. Same exact wedge, same exact drop down. It's again, they're not the same company. They all have different fundamentals, right? But these are fairly, I would treat these two the same when it comes to options. I think it goes within this wedge a little more and then breaks out. So if this goes down to about 480, I'm probably going to long month out options. When is earnings? Oh, it's a long time away. Yeah, I would probably long to 2 month out calls.
Beginning of February is your
calls, and I would go target is January, end of January or February. Yeah, probably maybe mid February. The monthly cons. I target 492, and then I target 510. Really, I don't think 500 really isn't a big level on Microsoft right now. 505 kind of is, but I'd probably start taking more off at about 505, and then 512 I would be done. But I think there could be a breakout and then a dip back to 490, just because things don't move in straight lines. I mean, you see the same thing on Apple. It broke out up to from 200 to 215, came back down to 200, and then moved up. So very fast. It was just squeezed. So I see the same thing happening. You don't even need to buy it here. You could wait for it to break out, wait for it to come back to 490 if you want, and then enter there. But I'm trying to get a low entry at about 480, buy February contracts, maybe even some Marches. I would probably go for 425s. I don't know the price, but I know that they're going to be a lot cheaper than 500s. Maybe I'd do call spreads, buy 500, sell 525. Again, I don't know the prices off the top of my head, but a call spread is a good way to prevent against the theta burn and time decay. So that's probably a play that I'm looking to enter this week, guys. If I see a 2% Well, would 2% be about $8? Yeah, it would. 1.5 to 2% drop on Microsoft. I'm going long calls.
There it is.
February calls. And then I'm gonna have a stop, right? And even if it's further out, like I can use a 15% stop, and honestly, a 20% move on February or March contracts is gonna take a lot. So, that's my Sunday banger, man. A couple of them, an options play and an equities play. Have fun, knock yourself out.
Everyone, have a wonderful, wonderful, and safe New Year's. Hope you all got good plans set up for the first of the year. New Year's Eve. Have a drink, have a toast. Stay safe. Remember, Uber is cheaper than a DUI. Do not. Be smart.
Please do not drink and drive. Please be smart. Even if you have a Tesla, you're still, and it drives itself, you're still under the influence. Please be safe. All right. We love all of you. Please, if you haven't subscribed yet, you are legally obligated to subscribe or follow on whatever platform you listen on. If you learned something,
where was everybody last week? You guys, it was like Christmas or something.
If you learned something, you are legally obligated, because now I have to finance this microphone somehow. So please
we will find you. We will find you. We will track you down.
Don't make us paywall. So all right, everybody. Much love and sending health, joy, peace, and go text somebody or call somebody you haven't talked to in a while and check on them. All right.
Happy New Year.
Happy New Year.